Welcome everyone, and thank you so much for joining the first DeFi Talks show. So today it will be like a special stream because we have Ash from Divine Dogs, and we are going to talk about everything DeFi, and hopefully you will like learn some stuff about like Solana DeFi, how to set up like a pool, and like we basically talk about like the fundamentals of like like how to make some money while farming some Sol and tokens. And also I will be co-hosting with like Jazz from the team, like the Decoders team, that will co-host with the show with me. But like before that and before like we start the show, let me just like recap what like Divan Dog is and also like Decoders. So yeah, Divan Dog is basically a collection like centralized about like talking like about DeFi and like educate like the whole Solana ecosystem about like again exactly what we are going to do today, and that's why we have created this partnership between Decoders and DeFi Dogs. But Ash will like talk about the collection a little bit better than me. And about Decoders, it's pretty simple. Like what we are building right now is like the first decentralized and community-owned YouTube channel. So if you are here, you are participating in that model and adding a Web3 layers to the creators economy. Basically, the way it works is like pretty simple. Like we are going to mint the thumbnail of each video we are producing on the channel, raffle them, and if you win it, then you will get entitled to the ownership of the video and a portion of its revenue. And by doing that, we are going to align financial incentive between content creators and their communities. And the channel will be the proof of concept of that thesis. So the best thing you can do if you want to know more about DeFi and participate in that new meta of like the Web3 creators economy, subscribe to the channel and comment during the show like everything that every question that you can have for Ash or myself or Jazz about like Decoders, DeFi, and everything else. Let's start the show and welcome like the two person that gonna make this stream 10x better. So, guys, what's up? How are you guys?
What's up, man? I thought you were gonna wear the pink hoodie this time. I thought we were gonna switch out. That was the deal.
That's yeah, bro. But like, I found like some like hoodies during the weekend, so like I had to wear this one.
That's fine, man. That's perfectly fine. Next time.
Next time. Yeah, okay. We can iterate. We need to iterate better on like like the tech side of it, but also on like the streetwear.
Yeah, we got to coordinate on all.
Yeah, exactly. So just
you just gotta tell him what hoodie you're wearing, so he doesn't wear.
Yeah, exactly.
He has like so many. That's the only thing you gotta coordinate with him. Just make sure you tell him what hoodie you're wearing, so you guys aren't friends.
Exactly, man. And man. But like, say again.
I said that's what we said they did in our first stream, that we're gonna keep rotating between hoodies. To make sure
that's true. Yeah, okay, I fucked up the first stream. Sorry, bro. But like also like, can you because I did it like pretty badly in the introduction, like can you like give us a reminder of like the Divine Dogs collection? What is it and what you're doing like for the Decoders audience?
Yeah, absolutely. So we want to bring kind of the fun that's in Solana NFTs to DeFi. So we did kind of our first initiative 2022 was bringing general education to Solana DeFi, and specifically our holders in the most general and basic way possible, right? We different trials and errors we used, different literature, different quiz and games, and we're kind of expanding all from there on that facet. So, we have a few gamification platforms coming out, some different ways to participate in earning yield with us, some hand-holding tools to show you how to invest in DeFi in the most simplest way possible. Things that people who have a lot of DeFi experience like myself look at when, going at different loans, different AMMs, liquidity pools, all different types of way to earn yield on DeFi. So what we kind of like to phrase it as that we want to be kind of the sustainable yield school. So passive income is always huge, but having that sustainably, as we've not seen in Solana in the past, is big for us.
That's pretty cool. Yeah. So basically, like, yeah, you educating people on DeFi aspect of it, and that's exactly what we're going to talk and like walk together on this channel, right? It's gonna be
Absolutely,
dope.
man.
Yeah.
Yeah.
And
I'm
just
bringing
like
it up.
you wanted like to learn more about DeFi, like at the main stage of the event, right? Like you're going to ask all of the questions to Hash and myself about DeFi stuff.
Yeah, I mean, I have good knowledge of DeFi, but it's just not my forte. Like, I am strictly a crypto guy, and I didn't learn about DeFi until I got into NFTs, and I learned about farming and yielding and pairing coins, and I was like, I didn't know you could do this, and here I am, a crypto guy, and I'm just like, what?
Yeah.
I learned it from when I first met Bitler. He had a project, and we were farming the royalty wallet, and we were giving that back to the community, and that's when I was like, wait, what is this? You could do this? So yeah, that was my introduction to it, and then now with all these AMA pools and stuff, my interest has even gotten to the point where I'm like, I got to figure out what this stuff is, because people are out here making money, and I mean, I'm just sitting on the sidelines with all these coins. What can I do with them? Make my money work for me. So yeah, I'll have some questions, but I'm mostly here just for some support, and I do have some perspective on the matter too. So.
Nice. Okay, so yeah, like the way we are going to divide the show is like, so Ash, you're gonna like recapitulate what happened like on Solana about like DeFi, and like talk about like plant like the scene for like the current ecosystem and what happened like in the last 2 weeks and like even last months, because it's gonna be a monthly show. And then we're gonna like talk about like the 101 basics of DeFi, right? Like and see like if the audience have like any question about it. Like we can do like a demo about like how to set up a pool or something like that, right?
Yeah, absolutely.
Or tools.
Absolutely. Yeah. So
let's do it, man.
Yeah. Let's get started. So obviously, the number one thing that happened, since the last time we've talked was last week, was Solana obviously having an outage for the first time in a while now. But that's obviously been something that's extremely frustrating for people, especially people who've been around for a long time now. But at the same time, I would say that we're definitely improving from when we were before, where, in 2022, we saw a few times where it was like month after month we'd have a shutdown. But the biggest thing happened on DeFi side for that is, obviously we're going to see some volume decline. We're going to see some TVL decline, and the biggest place that honestly hurt was liquidity pools, right? So there's obviously a lot of trading that goes on Solana DeFi because it's so cheap to do, and for retailers, obviously, people don't realize that, if you trade crypto on the blockchain, you're interacting with DeFi every single time, and that's what's the most popular thing in DeFi is DEXs and AMMs. Even though people might not understand them, they interact with them every time they trade tokens. So when the blockchain is shut down, like obviously there's no trading occurring and no volume, which means no fees for these different pools, right? So what's that's done essentially is that it's hurt people's monthly yields. Obviously, for 24 hours, nobody earned any yield from that. It makes people more worried about coming back and trading on Solana, and also people with bigger bags that want to kind of get into more of the boring side of Solana DeFi, where they just want to earn 10% year after year. They're not going to want to put their bags in Solana because of different things that may happen. So the bigger bags are once again reset and scared of coming on DeFi on that end. But from that side, it sucks, but there was an actual nice rebound from there. If you see, if you take a look at Solana total TVL on DeFi Llama, which isn't the best source for DeFi analytics on Solana, but if you see, there's a $20 million drop from when it crashed. Actually, $30 million drop in TVL, and it's it's kind of steadily still going down. But what is actually helping that out is Drift. Drift recently came out with their platform, and they keep rising in volume with their perpetual trading and their volume going through their trading platform. And people have really liked this so far. And they said that their DEX works much like a centralized exchange, and so it's giving people confidence in that end. So people want to trade there. So that's something that's kind of helped DeFi ecosystem on that end. But that's kind of there for how the outage has kind of really hurt.
Okay, because when there is an outage, like, okay, so basically, like, people who need to, for example, like, pay back their loan, like, they get liquidated, by the way, like, right away, or is that, like, if the price goes to a certain level anyway? Like, how the oracles works in that case?
Yeah, so there's a few different things that happen on that, and that's honestly one of the biggest questions in DeFi and in Solana and DeFi on Solana is that people don't know and DEXs don't know how to work with it shutting down like that. So there's a few different suggestions that are going around. Is like can be a backup chain somehow, like a layer 2 for Solana to kind of be emergency when it goes down to kind of activate those liquidations and everything like that. But at this point, it's why people are surprised that Solana actually went up after Solana went down, because usually what happens is that there's mass liquidations after it comes back online. So it's extremely interesting. A lot of these DEXs, things like, there's honestly not a lot of perpetuals and futures and leverage trading on Solana because of that reason. I know Drift does it and Mingo did it for a while, but the big reason for that is because of those outages.
Okay. Like, do you guys see like the comment chat on your side?
Cannot.
Do you see the comments? Oh, you don't see it? Okay. There is like VPs that said like can we spell out the acronym for the DeFi beginners among us? So we will need like to I guess like explain like not try to use like DeFi jargon stuff, but like I think SEX and DEX should be fine. But like VP, I don't know like which kind of like acronyms like you heard that was like already spelled out. But we will try to like explain everything.
So,
make sure
they said spell out the different terms.
Exactly. I think you should just see the chat. That's okay. Whatever. I will fix it for next time. So I'm also like here on Solana, like the DeFi Llama, and like indeed, like the drop was like like we have like huge drop. Okay, maybe I can screen share that here and then display.
Yeah, when you zoom out, it looks really bad.
Yeah. Let me try to get it to screen. Yes. Okay.
While
that's not.
Bitler's doing that, I will say I was actually
pretty
shocked too, like you were saying about the Solana not crashing after the reboot. Usually we see a drastic drop. So I was surprised by it myself.
I wasn't totally sold when it went up that 5%. When it did, because obviously we're seeing now that it was a lot due to Bitcoin that's coming down now. But I think when things like that happen, there are lags to where the price adjusts to that, just from not from a TA perspective or anything like that, but just fundamentally what kind of the experience on Solana has been is that it's gonna find its way to where it is, because and kind of take back what it lost within that 24 hours of being down. So have we seen the full effects of that yet? I don't think we have yet. As from a DeFi side, you kind of see that immediately. That's why you see on DeFi Llama, once you zoom all the way into last weekend, you see that there was an immediate 30% taken out of DeFi protocols because of that. But that chart looks really bad. But another thing to keep in mind is that, number one, like the most popular platforms that you think about are DeFi related, with NFTs aren't on there. So Sharky, Hades, Swap isn't on there. So I mean, Frac is the only one that's on there. So I mean, obviously you have Camino, and Camino's been rising up. Drift, like we talked about, has been on the up and up. But you know, in reality, these DeFi, or excuse me, these NFT DeFi deals do not need a massive amount of TVL to be successful right now. You know, so because the market caps aren't as massive for that. So when you see, it's more like the these different TVLs have become condensed into the best platform. So that's what you see in each bear market. You see volume and capital running and condensing towards the best product. So that's what you see. I mean, Marinade has a 53% market domination on TVL on Solana. That's for a good reason. I think Marinade still hasn't been incorporated into enough places because really their selling point is that it's liquid staking. So let me bring that back. So Marinade is a liquid staking platform. So basically what you can do is you can stake your Solana and you can earn your staking yield through their algorithm that goes through hundreds of different staking validators to make Solana more decentralized. And you can you get their IMSOL token as a reward or as a liquid token for you instead of your Solana. And you can use it at a lot of different places. DeFi right now, you can't use it a lot of different places with Marinade or with IMSOL yet with NFTs. But if I'm not mistaken, Hades just implemented IMSOL in there where you can buy NFTs with IMSOL, which is really, really interesting on that front. And so I think that's going to continue to trend towards that way. You can correct me if I'm mistaken, but I'm pretty sure I saw that.
Yeah, not 100%. Like, okay, so like in terms of TVL, like, that's basically like tracking like the SOL like prices, right? Even like it was like, okay, February, end of February. When was that? 2 weeks ago. What happened?
Are you zoomed in the kind of where that drop was?
Yeah, like do you see it? Do you see my screen?
So you see that kind of during February 10th, it's starting to come on the rise again, and then February 23rd, when you see that drop.
Yeah, exactly.
Is that if I'm not mistaken, that's when Solana went down, correct?
It went down like during this weekend, right? When the NFT Paris stuff. Is it? I don't remember, man. Like time's flying.
Yes.
Bro, maybe.
So
maybe.
I think Solana was down Saturday.
Oh shit! Yeah, no, you're right.
Yeah,
shit,
so
we
see that drop on that 25th, 24th area. I think like Friday, like night, right? Overnight, it went down. So I'm fairly certain. I mean, obviously dates are all mixed up with everybody else.
Yeah, me too.
Obviously, I'm PST, so it might be adjusting with my front there. But so with that type of drop, I would really expect that's because of.
Yeah, no, 100%. Yeah, no, you're right. Yeah, bro, like it was already on the 23rd, 23rd, like 100%, like the NFT price. I can't even imagine that it's that far already, and we're already on the 4th of March, 3rd of March. But yeah, whatever. And like the whole ecosystem is basically bleeding hard, like since months. So is that even good, like to start DeFi right now if you are like if you're starting out?
Yeah, so that's a fantastic question. And what I've said, during my class, right? So we talked about earlier with our holders that the best opportunity in Solana DeFi is always about taking advantage of wherever the volume is, whether it's tokens, whether it's NFTs on different platforms like loans and AMMs on Hades Swap. You have to follow the volume, and right now we're seeing a lack of volume, right?
Yeah.
And so with that, it's just like when we just zoomed in on the DeFi Llama chart, right? You're gonna have to zoom in and kind of see where the most volume is right now on that front. So there's different opportunities there. With that, I think you have to see what has been surviving better than the others, right? We touched on a few things about different collections that have held up better, and so a strong community. So those are better ones to potentially look at for lending because they don't have the competition. So they have that still even below 70% loan to value, but low variance while also having high volume on like a Sharky, right? So that's a perfect opportunity to get in with it, especially since most people on Sharky are looking to loan out like hundreds of SOL, or an average bag on Sharky is pretty large, and for lending it's pretty large. People who have 20 SOL would rather kind of degen it somewhere on a mint or on the NFT buy than look at lending. But if you look at some of these smaller collections that have that 4 to 10 SOL floor price, their lending market is very active for the people that could be a part of it, because you don't need that much of a bag to be a part of it, and the competition isn't that large on it to where the margins and the LTV is cut short. So that's just an example of how like a small opportunity pool is right there that you can take advantage of right now. And that's kind of how Solana has been, forever. There's always different small metas, small opportunities that people take advantage of in all times of there. I know we've seen that with different NFT metas back in the day, where it'd just be like different CryptoPunk derivatives was something for like a week, and then the Ponzi scheme meta was something for a week, and the tokens was something for a week. And so it's on a much, much smaller scale. There's different things like that happen within these different Solana DeFi platforms.
Yeah, that's interesting. So yeah, what do you do right now, like for you personal, like for Divine Dog, like what's the strategy? Yeah,
so two biggest things is, like I said, we follow the volume. So right now, Sharky still dominates the lending market, right? Sharky dominates the lending market, and they still have consistent volume. But with the volume comes competition. So while you have the competition, you have to find those collections, like I said before. You have to get kind of creative with these different things. Sharky is a very simple platform. That's why they've garnered so much attention and so many users. But there's still different ways where you can be creative. Some people think it's so straightforward. There isn't any room for creativity, where honestly there are ways. But another way on that front, that's kind of for the smaller bags that want to get into it. And there's different ways of approaching lending there, because it has those potential yields that people are looking for while still being kind of degen. But another facet, and something that we talked about in the class as well, is different, so concentrated liquidity pools are a bit more advanced than regular liquidity pools, right? You have leveraged up on your fees, which means leveraged up on your impermanent loss. And so for people who don't know what impermanent loss is, impermanent loss happens when we even go back from there. You only get impermanent loss for being a liquidity provider. And so what happens is that in a standard 50-50 liquidity pool, you take one side of a token, let's say Solana, and another side, let's say USDC, and you put them together 50-50 to create this pool. So they have equal sides. So say back to our glory days of Solana being $100, right? You have 10 Solana being $100, you have $1,000 for that, and then 1,000 USDC to create that pool together, right? So when you put it within a pool, you earn the fees based off it trading, right? But impermanent loss happens when Solana goes above or below what you entered in the pool with. So, for example, if Solana went to $25 from 20, the two sides of the pool are not going to be equal, right? So what AMMs do, or the automatic market makers, like these decentralized exchanges, basically the smart contracts behind the decentralized exchanges, they have to even out your pool for you. So what they do is that they sell someone on the Solana side to equal the USDC side. And what happens is that you get small impermanent losses where, if you just held the token by itself, the two tokens by itself, you would have more of a profit. However, those offset with different fees that you get from being a liquidity provider. So what we've kind of looked at is that look, you can use these liquidity pools for a number of different things, especially concentrated liquidity pools, because it adds a whole new layer to it. But you can use liquidity pools, for example. How I use them personally is that, so you have to gauge, and you have to kind of put out your own plan for your DeFi, right? So my plan, right, is I want as much Solana as possible for the next bull run. So how I approach different things is, okay, if lending right now is super competitive and there's a higher risk for me to not get the Solana back and have lower Solana than I had originally, and it not worth that risk, I can go to a liquidity pool with Sol USDC, and I'm kind of feeling like we're going to be neutral and maybe even go down a little more just because of kind of the issues we're having volume-wise. I'm going to set up a pool for USD and Solana. If it goes lower, I'm basically dollar cost averaging more Solana with that as it goes down. So how that works is, like we talked about, these pools have to balance each other out. So when Solana goes down, that one side of the pool is going to have to feed into the Solana side, so you'll have more Solana. So it's almost like dollar cost averaging, and with that, why I earn fees. So that's an awesome thing for me, and I don't care about how low Solana goes as long as I'm getting more of it, right? See, and so that's how I'm thinking about it. And so I applied that logic to that pool. And I'm like, okay, that's a great play for me right now with lack of volume and heightened competition on the highest yielding platforms.
It's basically a short position, right?
A put position, is that what you said?
Like, if you have a short position, like if you bring liquidity to Sol USDC and you want to collect more Sol at the end of the day, then you bet on the fact that Sol is going down. So because of this impermanent loss and rebalance, automated rebalance of Sol on USDC, then you're betting on the price going down, so you can get more Sol, and you're happy because you just need to exit at the right time to collect your Sol back. But that's basically it, right?
Yeah, I mean, it's a short position that can also benefit you if it goes up, right? So impermanent loss works that you're just not going, you're still going to profit, but you're not going to have as much profit as someone who just held the two assets, right? So that's what I think is super unique, in that your impermanent loss can get offset with the fees, right? The fees through the trading volume. So that's what's super neat about it. But when it happens where there's less volume and less volume movements, when there's movements within Solana with less or volume, that's what really is scary for DeFi people and liquidity providers, because that's like you're supposed to have that trade-off to where if there's movements, you get some volume and fees off of it. When there's not a lot of movements, which that means there's not a lot of buy or sell orders happening, and it's not active and there's no volume, that's when it can get scary.
But the API is going higher, right?
You said what? Sorry?
Like the API of the pool is going higher if there is less volume and less people bringing liquidity. Or the API stay the same as long as there is the same amount of liquidity, but because of the volume is going down, you just don't get it. Yeah, no, it's not working, right?
Yeah, that's extremely true, and that's something else. Yeah, you can think about with less volume, there's going to be probably less people providing liquidity, which kind of balances that out. With less volume, and people getting scared about not getting the APRs they want, people will withdraw their liquidity, which is better for everybody else in that said pool, right? So that's definitely one way to think about that as well, and that's a fantastic point.
Yeah, it's basically like some active non-trading activity with crypto, which is pretty interesting. But it's something you have to track every day or every week, right?
Yeah, so concentrated liquidity pools, this is a bit layer deep, but depending on your margins. So let me just describe a concentrated liquidity pool real quick for people who don't understand that and they just got introduced to standard liquidity pools. So what concentrated liquidity pools are is traditional liquidity pools usually spread out all the capital that you put in across a very wide span, like literally from $0 to an insane amount, like 10x, 100x of your the price, right? Which makes it extremely inefficient. What contra liquidity pools allow you to do is you can select the margins in which you want your liquidity to be provided within. So say for an example, in a Sol USDC farm or pool, you can say, I just want my capital between $19 and $25. That's where I want it. And you basically leverage up on the fees that you would have before. But with that wider span, right, you would have less impermanent loss because there's much more movement and there's much more capital where they can sell more of one side or buy more of one side. It's across a way larger span. But with that and the closer margins, those movements are much more violent within your pool when there are smaller movements. So when looking at when to check these things, just honestly, the slower or the lower your margins are, the tighter your margins are, the more you're going to have to check it. So depending on that and depending how, it's also consider your sentiment, right? So say that you have really tight margins because you believe Solana is going to be volumeless for the next week or so, and there's not going to be a lot of price movement, maybe at most 5% up or down within 2 weeks. You have really tight margins, and so then you don't really care. But on another end, that's what makes contra liquidity pools so cool is you can adjust them depending on your sentiments. You can have a wide margin on the upside if you think you're bullish, and a wide margin on the downside if you're bearish, with a small margin on the upside. So it's really unique. There's so many different ways to play with DeFi that I think it's really unique. And for people that, Solana's shown one thing that a lot of retail people love passive income. Whenever that meta comes around, people love it, but they want like 100,000% APR NFT that gives them, shit token A, right? That's
yes, please.
Give
me that, bro. Give me that. Honestly, like you get used to that numbers like pretty fast when you get like like on my time on PancakeSwap and like even like on Wagyu Swap, like I've done the launch of like the Wagyu Swap AMM on like the Vegas blockchain, bro, like some like obscure blockchain shit. But like the APY was like 50,000 for like 2 days. You can just just farm, sell the token right away, dump everything, and then you make like 20% of your investment back in just like 12 hours. Like that was crazy.
And a good thing to point out on that is other chains, some people give different dexes kind of and I don't want to say like I want to keep it family friendly, but they give other dexes trouble for potentially misleading APRs, right? But Solana is honestly the best with it because how truly APRs can be misleading is because and we can go into that some people who set up these pools for their own token want people to provide liquidity for them. So what they do is that they apply these token rewards for people who apply liquidity in. So basically they say like Bonk had a very small amount, but basically for every week, however much liquidity is in there, like 5,000 of the tokens get split up as a reward for anybody who participates in this pool, right? And for some, like on Binance is really popular. Like they do like a massive amount of their tokens as rewards for a week, and so the APRs is like insanely amount, like 10,000%, like we said before. But the trading volume is like 1%. Like trade fees are like 1% of the yield. So what that shows you is that it's a very dangerous pool because it's just based on the APR is based on how much the rewards are worth and how long the rewards are going to last. So the more of that reward, the less the tokens are going to be worth. And then when that runs out, because most of the time you don't know when those are going to run out, the rewards, you're you're kind of just stuck holding the bag. And that's how a lot of these scam tokens happen, is that they do that, and then they just kind of withdraw all their liquidity or use that liquidity pool to kind of exit on everybody holding the bag. So that's popular on other chains, but that's not the case at all with Solana and like a Orca. There's very rarely token rewards that
happen with Bonk.
Yeah, it happened with Bonk. Bonk, since Bonk had so much volume, it was only like 1% of the reward.
Yeah. But do you want like to show like the people like what you can do on Orca or even Raydium about like those liquidity pool? Is that something? Yeah,
absolutely. So
okay.
So let me go
switch
back
to that screen.
I was going to interject and ask, if somebody was a beginner, like how much would you recommend them start with if they're getting into liquidity pools and doing like some yielding or anything like this with Solana and USDC? Like, what do you think is a safe bet for someone to get their feet wet?
So that's an amazing question, just because this is just a perfect time to plug this, but I'm very glad you said that. We actually just created our Orca Whirlpool paper trading bot in Divine Dogs Discord. Literally last week, we launched it. So people could honestly go in the Divine Dogs Discord and get their feet wet by paper trading with whatever margins that they wanted and whatever imaginary capital that they want within.
That's
and they
cool.
can choose between the top 4 liquidity pools on Orca. So that's an option there. But to answer your question on the other side, I would definitely go with like a round number, whatever round number that they can think of. First number that comes to mind is like $100. I definitely want to do more than 10% of your bag to get your feet wet. And honestly, the first place that I would go upon is, where I started my DeFi journey and DeFi pool journey on Solana is Raydium. So I actually share my screen right now and kind of get that going on that end. But can everybody see my screen fine?
Yep, I'm sharing it in a second.
And just to come back to your little your launch there, do you have to be a holder to access that, or is that free to anybody? What's the details on that while we're getting the screen share set up?
Yeah, you do have to be a holder, but you can be a holder of any one of our collections. So
including your it's like
including
Soul. So,
including a transcendent, you can have access to that.
So I mean, honestly, anybody that's listening, that is a great learning right there. It's just a really quick entry into the ecosystem for Divine Dogs, and you can work on a paper bot and practice DeFi trading without your money, just to see if you can get good at it and understand it. I think that's awesome. That's huge for the space, man. That's really big.
Appreciate that. Yeah, that's something that it took us a long time to work out the details of that and making sure that it gives the most accurate feedback on that, because definitely we ran into a lot of issues to where it would show much more yield than it should have and not show the correct impermanent loss. So kind of working out all the kinks for that to show you like truly the risks on that end, and then also the potential, the reality of some of the yield, right? You're not gonna 2x in a week, right? But it's something that is sustainable and stable once you really kind of get the hang of things. That's much greater than your than anything else that you can find in traditional finance. So
yeah, aka 1% APY before fees.
Yeah, even 1K APY, but even this is going to sound really bad, and this is not guaranteed.
0.01%
at all. I was going to say, like, it's there's different sustainable things out there if you know what you're doing and you actively manage it a bit. Like you're going to per se beat the market. Like it's going to be more than a 10% per year with the S&P 500, and that's what I think is kind of really unique. Is that people who kind of just trade in traditional finance and just kind of have their money thrown somewhere. It's obviously not their life savings, and if they're of age to kind of take risk, I don't kind of see the benefit of just throwing your money in a financial fund when you're young and still have the ability to take risks.
1%.
When there's decentralized finance out there that's shown for multiple years that this can be sustained if you are smart. So
100%. Just like quickly, like the chat, like everyone can see the screen, right? I'm checking on YouTube, but that should be okay. Yeah, like everything should be correctly set up. Yeah. So hash. So right now we are on Raydium, right? So yeah, what can people what people can do here, and how do they make money?
Yeah, so Raydium. Yeah, absolutely. So Raydium is a platform that many people, especially that came in and in 2021 in Solana, this was like the DEX for everything, for a lot of DeFi things. Like a lot of people would swap their tokens here. You know, when Atlas originally dropped their token, a lot of people came to here and traded that around a lot. I remember when I did, but basically what this is the OG kind of DEX on Solana, and I don't quote me on that. You know, like I said, I've only been here for since fall of 2021. Not some really OGs and triple OGs out there, but I'm just on a random burner wallet here. But this is kind of the basic swap feature. But there's different. So I got to look at this because you know DeFi on Solana is really enhanced within the past couple of years, and honestly within the past year it's been really progressing with being the most capital efficient possible while leveraging the infrastructure of Solana to kind of maximize these different really complex but interesting ways to leverage your capital. So as you can see, Raydium also has a concentrated liquidity pool section on this side to kind of give you guys a picture of that. So Raydium is, you know, like I said, the OG DEX there, but honestly, Orca has been killing the game as a DEX right now. Like Raydium's right underneath them. As you can see, it's 46 million for Orca and 38 million for Raydium. I think Raydium is a familiar face for a lot of different people, and that's why they hang out on Raydium. But Orca, just the UI and everything that we're going to see there, I think it's very straightforward and very simple to kind of get you to understand different things about concentrated liquidity pools. But Orca, like I said, is only concentrated liquidity pools. So a starter would definitely want to check out here so they can get a kind of full scope of different liquidity providing. So this is their concentrated liquidity pool section. As you see, these 24-hour APRs, which this is not an APR or percentage rate for 24 hours, just so people know. That's
give me the money.
Yeah, it's the annual percentage rate predicted over the past 24 hours of volume. So what Raydium does that is pretty unique is that they have a lot of these pools, right? Like we said, those token reward pools that they have to incentivize people to put capital within their pools and not a competitor like Orca. So you see that they give out roughly $3,000 worth of Ray per week to people providing in these pools, and that's divvied up equally amongst all liquidity providers. So here you can see different things, and we're going to see something similar on Orca, is that there's these ranges and these margins we were talking about that people can concentrate or condense their liquidity, right? So it's 12% down from the current price and 12% up from the current price, right? This would be a typical margin for someone who is very neutral and wants to kind of get the similar structure of a traditional liquidity pool without having it extremely spread out and taking advantage of the yield that can come from a concentrated liquidity pool. So something like this is someone, like I said, someone who's pretty neutral on the future for a little bit, and they can do that. So you see when you stop earning yield, it goes outside of these margins. So when it goes lower than $18.83, you will not earn any yield. And when it goes that far down, you'll have 100% Solana in that pool. And that's kind of maxed out of impermanent loss. So what that means is that traditionally or originally, when you get into this pool, this is about even. So you'll have 50-50. So you'll have, like we said, $1,000 worth of Solana, $1,000 worth of USDC. But if it goes all the way down past here, you'll have 100% Solana when it goes past these margins, because there's no more capital on the DC side to make up for the downward price movement and volume. The same exact thing can happen on the opposite side, where if it goes past 12%, you'll have 100% USDC, because there's no more Solana to feed into the USDC side as things obviously dollar cost average into each other. So
quickly, like if Solana is going like to $50 in 24 hours, so there is like the impermanent loss triggering, right? But like, so if I don't get pulled back my money, this impermanent loss is still virtual and it's not like applied to my stack. But if I need this sold to after this 50%, like 100% up in price, then the value of my stack that I will get back will be less than what I would have get if I just ordered in my wallet, right?
Yeah, and especially for concentrated liquidity pools, right?
Yeah.
So if it went up 100% from right now in 24 hours, and you say that you just didn't check it for 24 hours, it would only be max of 20% gain on your Solana. There wouldn't be any higher from there. You'd have all USDC. So that's what's very risky about that, is that if there's massive movements like that, hopefully there's a lot of volume. Like I've been a part of when, a few months back, when Solana went from $21 to, like, when we saw 21 to 8 in over a span of a couple of days. Obviously that was a massive loss and everybody was hurting a lot, but the amount of volume that happened, and with the pool that I was in, like in the top of the trading fees, like I gained like 20% of my capital in my pool within 48 hours because of the amount of volume that went down, while also gaining more Solana as it went down. So like my Solana itself, it was went like up 66% or something from when it was $21. And obviously that's a lot because due to the downward price movement. But imagine if I was just holding Solana by itself, I would have just lost that much, right? So I had a lot of that went and deferred and, covered my losses just because of a liquidity pool. And people don't think about that rarely at all when thinking about liquidity pools, right? They think of, oh, well, I need it to be the same price for this amount of time so I can just get my fees and that's it. Or if not, it's worthless. If I haven't identified a point in time where it's going to be neutral for X amount of time, there's no point in being in a liquidity pool. And that's the opposite of the truth. Like we said, there's different creative ways of being a part of DeFi, and people just don't realize it. So that's kind of one thing that we see with
that's interesting. So again, like if for a shitcoin like Bonk, like the best strategy to do it is like get the airdrop, sell half of it, going to a pool, and then wait 1 or 2, 3 days, and then sell everything.
Yeah, and that's something we talked about in the class earlier tonight too, is that Bonk was honestly one of the most lucrative times in liquidity pools, as someone who, if they saw the first post about Bonk, if they went, instead of bought Bonk, use the same amount of money to buy half Bonk and half whatever pool you wanted, they would have gained much, much more. Just because even if it went up, right? If it went past up, you're gonna obviously have that advantage or have that profit of it going up, just not as much, and that's very slight amount. And what I want to talk about with impermanent loss too is some people think impermanent loss is massive, and with concentrated liquidity pools, it can sometimes be like that. But let's look at a standard liquidity pool, right? And let's use this liquidity pool calculator on here. So this is a very, very simple one, right? So let's show, say this side was USDC, right? And let's say this other side was Solana. So let's say that for some reason you were asleep the entire time. but you have a standard liquidity pool, and your Solana went from $20 to $30. You're like, oh my gosh, this 33% increase. Like,
Yeah.
I have so much impermanent loss, right? When in reality, like let's check it out. It's a 2% impermanent loss from what you had. So, in reality, and obviously this is a traditional liquidity pool. So I don't want people misunderstood. This is the same to be a concentrated liquidity pool, right? But if you had a standard liquidity pool, obviously there'd be a lot of volume, a lot of different fees to offset this 2% loss during that time. And so let's say, for example, let's say it's a 2% loss, right? Let's say during that time you happen to have even something very conservative as a 30% APR on your Solana USDC during this time, which that would be very conservative. It went up by that much. If it was a short amount of time, it'd be a lot more. So let's try that out, right? So 30% APR divided by 365 is this number, right? 0.082%. So let's say how long it would take that to offset to 2%, which is going to be a few days. It's obviously going to be a few days with that. So it's going to be 24 days, right, for that massive increase.
Yeah.
And let's say what it would actually be if it went from that. So for a $20 to $30 increase would most likely be about a month and would offset that. But let's say it happened in a very short time frame and it doubled, right? Or I'd say it'd be around, if it was in 48 hours, I'd say it'd be around 120%. And that's still pretty conservative if this movement happened during that time. So using this calculation, which I'd say is more realistic, you would, let's copy this. You would have, take you 6 days. So let's say this happened in 48 hours, right? You'd possibly have 1.5% of impermanent loss from that, which that's still
that's
negligible. Worst case scenario and very conservative on that end, right? So it's an example of how impermanent loss is not as insane as people can make it out to be.
Oh, that's interesting. But that's for the traditional double liquidity pool, right? Like the 50-50 ones. Yeah. Okay. And I mean, I think for the people in the chat and watching this video, if you want to test out with $100, $200 and something like that, that's the easiest setup you can do, right? Take a Sol USDC pool. That it's 28%, so you get 20% APY or APR, which is good.
Yeah, let's look at the pools. So that's so right now, I mean, I'm gonna be honest with you. There's look at this volume. You see $4.5 million worth of volume or with liquidity within here with only 24 hours of volume. If we go over to even the concentrated liquidity pools on here from Sol to USDC, it's so much more, right?
Yeah,
so much more, and it's a fraction, 1/10 of the liquidity, right?
But what are the risks associated between those different kind of pools? Because the concentrated pool, you need to be even more active than the liquidity pool, right?
Yeah, absolutely, for sure. It's like I said, there's a lot of different things to think about it. When obviously I'm talking very loosely about concentrated liquidity pools because for the most part I am only in Sol USDC liquidity pools, and there's only one outcome for Sol USDC in my pool that I would consider bad is if it pumped up 100%, it doubled overnight, right? So as I'm talking, please consider my assessment, my sentiment of these different pools and of Solana in general, and that's kind of how I look at my eyes through these things for people watching. So, if you're really just getting into Solana to begin with, and you're not a huge believer of Solana, and you're new to DeFi, I would definitely stay away from these, right? I would look at different things. I'd study them, and like I said, maybe even if you didn't want to do the paper trading bot that we have, right, you can even just have a round number of $10, right, in
Yeah.
one of these liquidity pools, and just have that to show different permanent loss there. It's very black and white on that end, and kind of move from there.
That's interesting. Yeah, like maybe we should go a little bit like faster on like on Orca. Like, do you have anything else like you want to show on like on Raydium? Because like we already at the 1 hour mark almost.
Oh man, yeah. No, I mean the only thing is that Raydium has a unique concept with these farms,
Okay.
where they these are just Raydium rewards. So you just do that,
true.
and they basically just incentivize you to put liquidity within it with just straight Raydium tokens. That's unique to just Raydium on that front.
So, but what's the difference between that and like the pools? Like
so
the
these
farms and pool.
So these you don't like within these the trading volume gets converted to Ray, and then
okay. The reward's different. Okay.
Yeah. So you don't get the USDC reward that you typically have for this.
Okay, makes sense. Just is that like some tools that you can see yourself like using?
I've used some of this stuff, but I was not sure what I was doing when I came on here. I was just throwing stuff in there, and I was just like, hey, let's see if I can make some money. So it's actually cool for someone like me who has a little bit of experience, because I'm still learning, watching a lot of this. So I the information is more valuable than money right now, in my opinion.
And like chat, if you have like any question like about like the Raydium usage and like everything, like just feel free to shoot your question, and I will read it for Ash. But yeah, like okay, so we have that platform, and that you said like the contender is like Orca since like a couple of months, and they haven't have like more volume. So is that work the same way, or like can I do something different on Orca that I can do on Raydium?
So actually, Orca, they just specialize within swapping and concentrated liquidity pools. That's the only thing that Orca does. But they've done it in such a way to where they have a lot more volume than Raydium does on their concentrated liquidity pools, right? You see different APRs here and a much more different vast amount of pools here, right? I think Raydium's been doing better than they have in the past. Like they just recently, to my knowledge, opened up for concentrated liquidity pools. But obviously don't quote me on that. But obviously the first platform, to implement concentrated liquidity pools was Orca with their world pools.
Okay.
So at one time, Orca had their pools, and then they called these concentrated liquidity pools world pools, but now it's only just concentrated liquidity pools. So the reason why I am such a fan of Orca is obviously first mover advantage. You're going to have some bias there as well, but it's very straightforward on this end for that. Like they have a tutorial that you can have to kind of describe a little bit of how to navigate not only their platform, but navigate concentrated liquidity pools. They have a bit more of different way to approach, I'd say, this education phase. Like they give you more layman's terms on these different deals on this front. So you don't have to, like Raydium, where you have to set your pools, they give you options to where you don't have to rebalance or manage it less frequently. You can have this pass that has a really massive range to it, or there's an active to where you're really gonna have to watch it almost every single day. And there's a custom, just like we saw on Raydium, where you can adjust these different things, and you can see the APR being adjusted through that. What I think is very unique is also this leverage side, right? So this leverage shows how concentrated your liquidity will be compared to a constant product AMM pool. So a standard pool, liquidity pool, this number is 8x. You'll earn 8x the fees for each trade at the cost of higher divergent costs, right? So what this is basically saying is that for however much capital you put in, this is how much more you'd get as a reward than if it was a standard liquidity pool. So you have 19x whenever you have
What?
so yeah. So that's what's insane. So that's why we saw, if we look at it, we saw that only that 6% on a normal USDC Sol pool. And so those numbers aren't really far off. I know Raydium's pools are a lot different than Orca's pools, but it's really interesting to see that. But obviously that is the
Yeah.
cost. The cost of having those higher fees is the higher impermanent loss or divergence cost in their wording.
But like Radium seems like a bit like newbie friendly to use, right? Because like if you start playing with like the leverage and stuff, I mean, I guess it's the same features than the concentrated pool anyone Radium, right? But like, yeah, if you want to test something, like just go to the okay, you have the same thing here, I think, in the liquidity pool on Radium, right?
Let's see if they give you your.
That's the same. Do you have the leverage here?
No, see, so it looks like
okay.
they don't. Maybe it's in here. Maybe it's in something else. Like I said, I don't really use.
Yeah. Okay. So you usually use Orca like for all of your strategy, right?
Yes, and so
okay.
so it's. I mean, I'm sure if we input some Sol in here, we had it show us. Obviously, it shows the deposit ratio, but you can see a lot of these things as is, right? Deposit ratio shows it right here. Your leverage, it shows it there. So I think this is a bit more user friendly when it comes to concentrated liquidity pools. But DeFi in general, this might just be a safer place to play. I'd say outside of concentrated liquidity pools.
And what do you do with like the token platform? Like, do you dump it and resell it for Sol or like USDC, or do you keep it for like future? I don't know, speculations.
So are you saying
for the Orca token, even like the Raydium token, like the Ray? I know like this token, like the tokenomics of Raydium are like kind of like not cool, and Orca I don't really remember, right? But like Raydium tokenomics, it's kind of meh. What do you do with the token that you get from rewards? Do you sell it or do you reinject? Like, do you compound it? What do you do?
That's what's extremely cool about Orca, and like I was talking about originally, it's 100% trade fee, so it's only Sol and USDC that are.
Oh, that's rewards. Cool. Dope.
Yeah, so only Solana and USDC, which are obviously two highly coveted tokens. So you see here, you can see those rewards there, but you see a majority of these are 100% trade fees. 100% trade fees. You see, this is some Orca rewards, some Marinade token rewards. But that's a stable pair, right? That's a stable pair. So that's complete. There's another stable pair, right? These stable pairs are ones that are highly correlated within each other, so you don't have impermanent loss, or it's very rare. So
but like for example, on this pair, like ST Sol, like you do better than just you do less performances than just doing stacking on a validator, I think.
Yeah, true.
Right.
That's very true. Yeah.
Dust Sol, I didn't know they had Dust Sol pools, man.
Oh yeah. I remember I helped out JB set this up, and we went. And also a really cool thing is that, so I think his name is NFT Doctor. He's in X Plus DeGods. Yeah, I know he went to.
I met him in Paris. Yeah, I met him in Paris. Yeah, really nice guy, man.
Yeah. So he made a thread about this, about how he instead of he was going to buy another DeGod, but instead, because he wanted to get more dust, but instead he thought, what if I put that into a Sol dust liquidity pool? And what he found out is that he ended up gaining more dust as rewards, as trading rewards for all 10 of his DeGods combined than he did with than he would have with buying that one DeGod for Sol. So it's, I mean, honestly, this is probably the best way to farm dust is on these liquidity pools, because you get
I was gonna say, now there's no staking. I mean, Bitler's light bulb just went off. He was just like, wait a minute, I can still earn dust here.
I need to DM the guys after the stream, bro.
Yeah, you're gonna see it. You're gonna see a new pool show up tomorrow, Ash.
Yeah, the API is going down.
Yeah, this liquidity number right here is gonna like shoot up to like 1 million or something. But there's also different ones, right? Too. There's Dust USDC pools as well down here. So that's pretty cool.
Okay. NFT.
Yeah, when you exchange the Phantom, it usually bounces off through Orca. I always noticed. So you usually see it go through Orca. Even when you use Jupiter, it usually bounces through Orca. So it's probably hitting these pools when you're like swapping out for Dust in your Phantom wallet.
Exactly.
Yeah. That's fascinating. That's cool. That's pretty cool. Okay, so we have some like concentrated. So from Khalif, concentrated LP are the best. One of the things that I really like to always check is the 24 hours fees when I pretend to open a certain like a liquidity pool. So where is it? Like the 24 hours fees? What does it mean?
Yeah. So he's talking about right here. So
okay.
Big thing to look at is this, because you can see a lot of volume, right? But that all depends on the fee rate, how much fees are actually going to happen. So I'd say these bottom two are the most important things to look at when thinking about a stable pool that's going to be earned sustainably. Like we said, there's other pools that, like we're talking about, they some random opportunities like the bonk that people haven't caught on to yet, so they can get that has lower liquidity within them. So I wouldn't worry about liquidity then. Obviously, you see the 24-hour fees are massive, and so that'd be a green flag for you there. But most sustainable pools are going to be ones that have pretty high liquidity and have pretty good fees, and obviously that's going to show you the APR.
So what about the 24 hours fees for the Dust Sol pool? What can you tell me for that? Is that a good one?
Yeah, so the thing is obviously the 24-hour fees is just the fee rate multiplied by the 24-hour volume.
Yeah.
Right.
Okay. Makes sense.
So that's just going to equal to that of the fees that come from Dust and Sol together.
And if you had like, let's say, a sustainable amount of Dust, would you put some Dust in there?
So that's a great question. The thing is that if Dust goes up by a lot, you're just gonna be stuck with Sol by itself, and you're gonna be very mad at me that you have now all Sol instead of your Dust. So for something like that, I would, if you're bullish, like we can talk about all different sentiments of doing pools like this, right? So if you are more, they offer full ranges. So that would be a traditional liquidity pool. They would offer a full range like that. And so you could do something like that. But say, for example, like this is a good custom one for someone who thinks the price of Dust is going to continue to go up. And so they don't lose out on that price gain as much. They're still going to lose out a little bit because natural and permanent loss, but you're still going to get that 18% up, and then the 8% down obviously means that if it goes past that, your pool will go to 100% Dust. So
that's cool. And like, okay, so okay, no, I don't have a question. I'm just thinking. That's cool. Just, do you have anything to add?
Bitler's gonna go set up a pool where he's gonna be putting some Dust versus Sol up in the liquidity pool right after the show, guys.
I need to DM NFT doctors after. But that's interesting. Okay, so right now, to summarize everything, basically you need volumes to get like a ton of fees, to generate a ton of fees. Then you get like the fees are redistributed to like market makers, which are like open like a participant into the liquidity pool. And so basically a range market is what you want when you want to like stack your coins, right? Because you don't have the impermanent loss, but you have the volume and like people are still trading.
Yeah. Basically. So the best time for DeFi, like you said, is a bull market that is like in a stagnant phase.
Yeah.
So there's still a ton of volume going, like you said, it's still a ton of volume going through there, but there's not like absolute pumps that get you kind of wrecked on all.
DeFi. Okay. No, I have a question. Okay, so it's about Dust. imagine that shit going to bridge like next month. What's happening to the token are inside this liquidity pool?
Ooh,
Like it.
I mean, they're probably gonna have to close the Orca themselves are probably gonna have to close the pools, and it's gonna get
Really? Okay.
yeah. They're probably gonna have to close these pools because of that. That's a bit technical for me to completely understand that, but
Okay.
I would assume that once it's bridged over, there's obviously not going to be any more dust in those pools, so it's going to either automatically close or Orca's going to close it down before that.
It's not even like maybe not like maybe like the same way we will have like Digods and Newts on Solana for people who are not bridging. Maybe we will have like a stack of dust on Sol, but that means we will have dust price on fucking Polygon, ETH, and Solana. So how does that work for the price in the fucking pool? Do we have like arbitrage opportunities between all of these three dust form? Like
yeah. It's exactly that'd be exactly it, and that's honestly how a lot of honestly how a lot of volume is on these different pools is because people arbitrage. People don't realize how much volume is actually represented by people doing arbitrage between different dexes, especially with tokens that are listed on centralized exchanges as well. 100%. There's so much opportunity for arbitrage, and there's so many bots that do that thing. So yes, there will be a ton of arbitrage opportunities that come before that, and it might actually even help the volume of dust because of the arbitrage opportunities.
Let's go.
One thing I am concerned about though is that I don't think there's, I mentioned this before. It's like my biggest, like my only downside about Frank is that he just does not care about DeFi at all. Like I said, like I told you before, he's literally said like he's had tweets where he's like NFTs are greater than DeFi, and it's like we've seen those two worlds collide seamlessly within the past few months. So he might not be thinking about the implications of dust within Orca pool. So I'm gonna be honest.
Okay, I can ask in April. Like that could be a good question.
Yeah. I can also see us having different liquidity pools, pairings. We're going to see probably dust to Poly, dust to Ethereum, dust to Solana.
That's true.
I mean, like we might see a lot of DeFi on all three chains. Because like you were saying, the Utes and DeGods are going to be on multiple chains because nobody's going to move all. There's still going to be people that haven't even deaded their god yet. You think they're going to move over to Ethereum right away? So that dust is probably going to be on both chains. So it'll be interested to see the price action, and like we could probably bounce around between chains, probably make more money and leverage even depending on the price actions in these pools.
Yeah, but so that means there is like even an opportunity for a dApp like to bridge. If you have like liquidity of 3 chain, you can bridge dust and like do arbitrage basically. Like if you have some money, like if you have like 112 on Polygon, 120 on ETH, and like 115 on Sol, you can play some pretty cool stuff there. You can like drain Polygon, going back to ETH, and
the only problem is there's ETH fees.
Market manipulators.
Is it? No, it's just like using like the discrepancy of the market between chain, right?
Exactly. That's exactly what we're gonna say.
Is that part of your thesis? Like what kind of token are you farming right now, basically?
Solana, man. I'm a big time Solana guy.
Okay.
I did dust for a while. I should have stayed on dust because that's one pool that was incredibly low on liquidity for such a long time when it was being traded, especially those times where after the first dump from like the ridiculous price dust was at for $10 for a little bit, and then it went down more stagnant, but then it went back like to $2. Yeah. Oh my gosh, when it was at $2 for a while, like there was like a month in time where it was 900 plus APR, and I just simply I guess I just didn't have enough faith in dust and didn't do that. But there was a lot of opportunity
cool.
and a lot of bags to be made earlier with that. But like I said, it's very up to you on what pools you provide for liquidity. Just as you would, people buy tokens that they like buying, right? It's the same thing with liquidity pools. They mine liquidity for pools for tokens that they like. So, for example, there might be people out there that are extremely bullish on the ruble token, right? With the roll bit, right? That token, and are enjoying these days after days with 500 plus APRs.
Yeah.
And I just couldn't care less because I'm not familiar with the token and I'm personally just not that bullish on it, right?
Yeah.
So it's not as objective sometimes. Like we said, there's a lot of space for creativity within DeFi, just people don't realize it.
Man, like
it's just also higher risk in those situations too. You gotta realize too, because the coins aren't so stable. Not saying that Sol is such a stable coin, but in comparison to some of these other coins, like Roll Bitcoin, I think Sol is a safer bet for your money, where you don't have to worry about waking up and it just being gone, or like
exactly.
Oh my God, I'm full of Roll Bitcoins and someone drained the liquidity. What am I gonna do?
Yeah, and that's right. I mean, but that's the price that they pay for the 500% APR.
Yeah, exactly.
That's kind of the price I didn't want to pay when Dust was 900% plus, or when Bonk was 900% plus, right? So, because no one really knows.
Yeah, that's what I meant. Yeah.
I was saying, I feel like I'd only be in those pools during my waking hours. When I went to bed, I'd probably pull my liquid out.
But Ash, maybe in a couple of weeks/months, we will set up the Views USDC pools together and make 10,000 APY on it. That could be cool.
Let's do it, man. Let's bring DJ yield farming to Solana. We haven't seen it.
I mean, it's utility, right? And you have to have a USDC pool, and I think even a Sol pool, to have your token priced on CoinGecko, right? So it's gonna be a mandatory step, man. At some point.
Let's do it, man. You know I'd be down.
Let's go. But I think do you have anything to share for this 101 first Docs DeFi show, or maybe we should wrap it up?
Yeah, I mean, just to give some disclaimers and some last tips. I know we said, especially me, I've said a lot of different things about different platforms, but at the same time, like I said towards the end of this, DeFi is very subjective and very creative on that end. It just depends on your risk aversion, your market sentiment, and just you as a person, right, and your ability to understand DeFi. Right, there's a lot of variables that are still out to understand. So knowing there's that many variables, I would take everything that I said with a grain of salt. Besides, obviously the objective things, like these are how these pools work, right? But whenever I say these pools are great for XYZ reason, listen to those XYZ reasons instead of aping in if someone does see this in the future and decides that.
And watch out for the 24 hours fees and impermanent loss simulators.
Exactly.
So I had a question that came in through my inbox about Orca. If you could field it, Ash. Someone asked if you need to have their NFT to use their platform, or does it give you any benefits to have their NFT?
So right now, no. Their NFT, honestly, the one thing that they did do was they were able to send you. Another great thing about Orca is that the NFT did give you the ability to set up alerts for when your pools were outside of their ranges or their margins. But now you don't even need the NFT for that. You can just set those up by itself. You can just take this. I'm going to share my screen real quick.
Okay.
Once again, for the final time. But yeah, if you just come here and you can go there, and then.
Okay, wait. I need to display it online.
Oh, sorry.
That's okay.
And honestly, you can't even see it that well unless you have a actual pool that's about to be deposited in. So.
Why is it?
Basically, once you go through the pool And right before you're about to deposit with your margin set, there will be just a tick just like this that you can say, I want to receive alerts, and you can either put your phone number, your email,
That's
or
cool.
whatever else. There's like a WhatsApp also. So different ways that you can get alerted once it's out of your range, so you can readjust those margins. But
Nice.
yep, that's you. As far as I know, there's not a true purpose for having their NFT right now.
Yeah.
As far as the DeFi side.
Awesome, man. Appreciate the answer there for the inbox message there, because I don't know much about Orca to answer that, so appreciate it.
Yeah, but I think we can. Do you have any other question, Jess?
No, I think for episode 1 of DeFi 101, I think you touched on the basics. You kind of just gave someone like that got their feet a little wet, kind of show them around the way. Hopefully, give them some interest in it. Maybe they'll come over into the server, because Ash, you do this weekly, don't you? In the community, I believe you do like lessons. How often do you do your lessons inside your server?
Yeah, so we actually have a few things that we. So obviously, we're continuing to develop more of those tools every single week. We want to continue pushing tools not once a month, but once every couple of weeks. So that's something we want to do. But also, every single week we have a live class that gets recorded. We also have a weekly Solana DeFi newsletter that's posted to our holders, and we also have a weekly DeFi strategy guide where we basically give 3 different strategies, potential strategies for 3 different market sentiments. So if you're bearish, neutral, or bullish, there's 3 potential strategies for that week that you can possibly participate in. So those
so
are
that
kind
value
of
is definitely there for being just in your server. I mean, and being a holder, it's not going to cost a lot of money. They have 3 different NFTs, different range from, I think your lowest is like a 0.25, 0.3. Mid range is like almost 2 SOL, and then your high tier NFT is like 15 SOL, I think, if I'm guessing the right range.
Correct. Absolutely correct.
Yeah, and the greatest thing I heard about all of this tonight was the fact that you can get at the lowest entry and be able to play around with building your own yield farms for free, like paper money. I think that's awesome, because that's how I learned how to trade traditional stocks. When I first got into that, was trading with paper accounts and doing like bogus stuff, because that's how I learned. I was like, oh, I just lost a crap ton of money. I shouldn't do that again. And that's how I learned how to do calls, puts, all that stuff, and like learn how to do margin trading was without my money. And then when I went live, I had that experience. So I think that's awesome that you guys were able to develop something to do that. And even myself will be probably resourcing that. I think I saw the announcement for it. I just haven't had a chance to really check it out, but I'm going to make a issue to check it out here this week.
Awesome. Awesome, man.
Yeah, and like Ash, like we have like also like next Thursday, we will have like a space together about DeFi again. Do you want to talk a little bit about that, or is that not announced yet?
Yeah, for sure. So next Wednesday is it?
Oh yeah,
so next
Wednesday.
Wednesday. Still nailing down. So I need to talk to you about this actually, because we have all of our hosts confirmed now, and it's some pretty cool names for that, and I'm super excited about that. But we also have one guest for sure, but the main thing is that we have all of our hosts confirmed in for sure. So me and Vittler will obviously be one, and then we're going to be announcing the 2 others that are outside of our teams pretty soon. Nice. They'll be, and so that's a weekly.
Okay.
It's a weekly space where we basically approach with all different hosts from different walks of Solana. So one of the hosts, has a lot of touch in with DeFi and has his own DeFi protocol. Another is a founder of a pretty strong community and knows DeFi and is more the NFT wave. Me, I've been a DeFi user for a year now. Vittler is obviously Vittler. Like, he's a legend, has the biggest bags on all of Solana, and a voice that a lot of people care about his opinion. And so someone that doesn't have as much experience within DeFi. So what we do is we bring on these different DeFi protocols, and we show them how does it look from each one of our perspectives, and how can they advertise this and show this and have more users from the general majority of the Solana DeFi community. So the average Solana NFT DJ might know nothing about DeFi. We talk to them about how their platform looks for them, how it looks for us, and how to improve that, and then how to connect better with the majority of the users that are people that have no experience within DeFi. So that's something super excited about. The hosts are super excited about it. Vittler was obviously game because he's just an absolute legend on every facet. But
no, it's gonna be nice. It's gonna be cool. And yeah, so we do that. So every week, and then we will have like this stream like every month, or every 2 weeks. Let's see how it goes. But yeah, do you have an idea of like what's gonna be like DeFi Dogs 1 or 2?
Yeah, so I think the best thing to touch on, especially with the popularity of it, is how to correctly judge different lending aspects, especially NFT. Obviously, NFT lending. It's been very popular. People have been getting very mad at different NFT lending and different loans that are underneath the water. And let's kind of show that that's a little bit to do with education and how we can improve that.
Are we talking about Sharky?
Yes.
Let's go. Okay, so I need to DM them and ask them to sponsor the show.
Well, you also have Famous Foxes launched Citrus recently, which is
that's true.
Platforms.
Yeah, there's Citrus and RainFi and obviously Fract. It's just I looked at, and like we said, following the opportunity is always following the volume, and it's like absolutely insane that even if you combine all the volume of those 3 other competitors, you still have to multiply it by 2 or 3 to even equal what Sharky does, which is absolutely absurd.
Okay, that's cool. Bro, okay. Do you have contact with Sharky guys?
Yes.
Okay.
Yes.
Okay, let's talk about the after stream. That's gonna be cool.
Okay.
Yeah, like chat, like if you have like any question, like it's time to shine, but right away before like we close up this this little stream. I hope you like it, and because you're gonna see more, you're gonna see a shit more of that. So I really hope you liked it. Yeah, just like what was the stream like? Did you like it? It was good, right?
Hey, you know me, I'm all about education. I've been doing it for the last year in this space. Trying to educate people just on the basics of just NFTs and just crypto. So, DeFi is still not like, my forte, but, I understand it, just not like Ash's level or your level. So, I'm along for the ride with my different perspectives and to be the noob asking the questions that people like myself that have an understanding of crypto might want to know to, get my feet a little more wet inside DeFi because, as an investor, I always want to make money, and if I can make my money work for me, we all know that's the way to live.
Make money while you sleep. Get those 5,000 APY.
I'll stick with this. I negate my risk, man. That's why I'm a decent investor.
Yeah, but don't worry, man. Like 5,000 APY, it's no risk. Without any risk.
We'll stick with the soul. We're not going for the old days of pancake swap. And,
I miss those days, bro. I miss those days.
Yeah, we made a lot of money back in those days. I was pretty new to it, but I was just pushing buttons and making money. So
100%.
You learn about slippage real fast back in those days. You're like, wait, I had double this amount. Why did I only get this in my wallet?
Exactly.
I didn't see that slippage. Oh, what's slippage? Let me look this up.
Yeah, that was.
But yeah, man, like, say again.
Said I completely forgot about the slippage days. Yeah, you'd trade your Degen pair to get in, and you'd need like 20%, and within an hour for it to even make sense.
You just keep checking you just start at 5%, and before you got the trade to go off, it was like 15% slippage. And then when you try to sell out, you're like, you don't want to go for 15%. You want to go as low as possible because you don't want to spend that extra money. So, but you also want to get out when you're trying to get out. So you're like, you go in the middle, like try 10% first. Shit didn't work.
Yeah, that was adrenaline days, man.
Got a finger to save the harm, right? But anyway, man, like that was a great stream. Like, thank you so much, Jazz. Thank you so much, Jazz. Thank you everyone in the live chat. Like, thank you for your comments, Ryan, VP, Khalif, and everyone else, Ronald, etc. Like, thank you so much for participating into that stream. Again, we will see you every Thursday my time, so Wednesday PST EST time, on Twitter Space with Ash, myself, and a couple of other guys. But like, we will announce that later this week. Another stream next month, or even sooner if we feel up to it. Like, yeah, depends on how we're exciting about about that. But like, worst case scenario next month, if not in 2 weeks. And yeah, thank you so much for watching like the stream live or even the replay. Subscribe to the channel. Check Divine Dogs collection on Magic Eden. They're cheap. Sweep the fucking floor. And subscribe to the channel again. Thank you so much. Thank you, Ash. Thank you, Jas. And I will see you soon.